Hello everyone, welcome back to my channel. In today's video, I'm gonna talk about like how I would invest my first $1,000 if I have to start over from scratch again. So I already built my portfolio of $171,000 and with all the knowledge that I have gathered throughout these years, today I'm gonna share like if I had to start from scratch today, then how would I invest my first $1,000? So I know it's feels a little bit risky to invest your hard-earned money because we really work hard to earn our money. But if we don't invest our money and put it under our savings account, guess what? Our money gonna lose value in a very quick pace. So in order to fight this inflation, high inflation, and become financially stable, I think there is no other alternative than investing. And in today's video, I'll try to give you a roadmap, a blueprint, like how you can invest your first $1,000. Once you have that all done, then you will be feel more confident to invest some more money, and eventually will build a portfolio more than maybe a six-figure portfolio. So without further delay, let's start the video. At the very beginning of today's video, I just want to show you the power of investing. So here I have logged into my Simple account. At the very top, you can see my current portfolio value, which is $171,501. And here you can see I have made almost like 46.34%, almost like 50% returns from my initial investment. So I have gained almost $54,300. And the time spent, then now the good question could be like how long it took for me to make this sort of gain. Well, all I started in May, so it's May, so it's almost like 2022, 2023, 2024, 2025. So it took me 3 years to make this sort of gain. So in 3 years, my portfolio is up by 46.33%. So now you know exactly like why it's important to invest your hard-earned money, because I can bet like there is no bank in the world can match this sort of return. If you put your money in savings account, it's like very small amount of interest that you're gonna get. Well, the next question could be like, yes, I am all up and ready to do the investment, but how should I start? Which platform I need to choose, and what kind of account I need to choose for my initial investment? Believe me, when I started my investment journey, I was also having a lot of doubts and questions, like how can I start investing. Then I did some research, and then I finalized my platform. So my suggestion to you, like, it doesn't matter which platform you choose, but make sure it's very easy to understand. It's not that complicated. So I'm in Canada. In Canada, Simple is pretty popular, and that's why I am using Simple. It's very easy to understand. It's very straightforward, so that's why I started with Simple. So, according to your country, you can do some research and find out which one is easier to manage, easy to understand. Because as a beginner investor, we should be able to understand the platform ins and out, like in a very easy way. So, choosing the right platform will definitely help in the long run. So once you choose your platform, the next question could be like, what kind of account I should use? So under my accounts, you can see I have multiple types of accounts. The first one is tax-free savings account. So in Canada, we do have this account type. So the benefit of TFSA is that the money that you're gonna make, the growth that's gonna happen is totally tax free. So you don't have to pay any taxes on your gains, which is amazing to grow your money. So as an initial investor, we should always go for this sort of account, the tax-free savings account. In Canada, for USA, there are different accounts like Roth IRA. So these accounts here, we can grow our money without paying any taxes, which is great. The second one is RRSP. RRSP is more of a retirement fund where you can invest your money and it got grow, and you don't have to pay any taxes right now, because you can get all the initial return, initial tax benefit from it. And when you're going to withdraw money once you retire, then at that point you have to pay taxes. So still I haven't started investing under RRSP, because I feel like right now I'm focusing more into this TFS and my non-registered account, because I believe Retired fund is important, but at this point of my life I feel I should have more control over money, because if I put money under RSP, then for the next 30 years or so I can't touch my money, which I don't like. So it's my preference, but according to your understanding or your flexibility, you can choose RSP. Many people invest under this sort of retirement funds. So the next one that I have is the non-registered account. Non-registered account is more like a personal account. So here the drawback is that you have to pay taxes on your growth, like on your returns. But a good question could be, if I do have TFSA, why I have started the non-registered account? Well, under TFSA we do have a limited room. So right now my TFSA is all maxed out. That's why I am choosing the secondary account, that is my personal or non-registered account. And the third one is crypto. Is more of a like a personal account, but it's crypto account, a separate entity. So that's why I am keeping this crypto account. So the gains is like under TFS is up by 56.65%. My non-registered personal account is up by 26.10%, and my crypto account is up by 141%. So now you may have a question in mind, like, if I made this sort of return from crypto, why I don't invest all the money under crypto? Well, it's a high risk and high reward situation. So it's very easy to make more money under crypto, but it's also very easy to lose a lot of money from crypto portfolio. So that's why we need to create a diversified portfolio. So if something happens to a particular sector, particular stock, is still our portfolio shouldn't go down that much. So that's why we need to come up with a diversified portfolio which gonna help in the long run. When I started my investment journey, my initial thought was like, yes, I am now creating a roadmap, a blueprint, and I will create a diversified portfolio, and when I have some more money I will just reinvest into these stocks, and I will keep the diversification, because without a proper diversification it's very hard to make substantial gain in the stock market. And during the situation like this tariff situation, it's very hard to be in a positive side. Even though all the stocks and everything are very volatile right now, still I am doing just fine, because I followed the principles and I diversified my portfolio as much as I can. Okay, now let's start the fun part. Now I will show exactly like how I would invest my first $1,000 with all the knowledge that I have gained throughout these 3 years of my investment journey. So the first thing I would do, I will invest 50% of my total capital, which is 1,000. That means $500 under S&P 500. So I am in Canada. In Canada, to track S&P 500, we do have this VFV. VFV stands for Vanguard S&P 500 Index ETF. A good question could be at this point is like, what is S&P 500 Index ETF? Well, S&P 500 tracks the top performing 500 companies of US stock market. So when we're tracking S&P 500, basically we're tracking all the good shares of US stock market, like all the tech shares, Amazon, Google, Microsoft, Netflix, and beside that a lot of good shares, Tesla and stuff like that. So here the good thing is that our $500 will be well diversified into this basket of 500 best stocks of US market. So if I want to show you the possible returns of this, in 5 years VFV has grown by 93%, so almost like 100%. So in 5 years it could double up your money. So imagine if you invested $10,000 5 years ago under VFV, now you would have like almost $20,000, because the growth rate is almost like 100%. So right now I am holding near around here you can see 18,000 under my personal account, and 12,500 under my TFS. So in total is near around $31,000 of VFV stocks. So a good question could be, what about the US market? In US market we do have similar thing like this is VOO, that I will cover shortly. So this VFV is really great. So here you can see the market cap is $21 billion. The PE ratio is very attractive, 17.27, and it also gives a nice 1% dividend. So not only the growth. So at the top we have seen just the growth potentiality. Beside that, it also provides a dividend. So every month I'm getting some nice dividends. So here you can see I got in April, I got these dividends. So I got $35 dividends on the TFSA, and I also got under non-registered account. I also got $46. So I got almost like 70-80 dollars of dividends. So, and I reinvested my money for the compound effect. So if you were in USA, you can also invest under S&P 500 tracking this VOO. VOO stands for Vanguard S&P 500 ETF. It's the same, but it's a US version. So my suggestion would be to invest 50% of our initial capital, which is 500, under this VOO or VFB, because it provides a very strong, solid foundation of our initial investment. And if anything goes wrong with particular stock, we don't have to worry about, because our money is well diversified, and our 50% of our money is safe, and we can sleep better in this way. All right, so after the $500 of investment, now we have like $500 left, and for the next $500, I would put my 25%, which is $250 under the stocks that I believe in. So I am an IT person, so I have a better understanding of IT shares compared to any other sector. So that's why if you check my watch list in here, I do have all the tech stocks that I am actively monitoring, like Apple, AMD, Amazon, Google, Intel, Meta, Nvidia. So there are a lot of shares that I'm currently monitoring. So for an example, if I click Nvidia, in 5 years, Nvidia share has grown by 1,390%, which is a massive return. And from my initial investment, I made a good amount of money from Nvidia. So right now, I do have like 60 shares of Nvidia, and here you can see my stock has grown by 750% from my initial investment. So guess what? I am pretty sure like you are working in a particular sector and you have a better understanding about that sector. For me, it's IT. For you, it could be something different. But if you are confident about some companies that they have the potential to go up in near future, and then you believe it's a strong company, then you should invest your next 25%, which is $250 under these shares. Not just one share. Pick at least like 3 to 5 shares and diversify your investment. So a good part about this sort of share, here you can buy the fraction, so the fractional share, so you don't have to put your whole money under one share. You can just diversify portfolio by buying a fractional share of at least 3 to 5 potential companies that you believe in and that you are confident about. So now we are done with our 75% of our investment, and 25% is left. So for the next 25%, I would put like 15%. So 75 and 15, it's like 90%. So next 15% under the growth stocks that it are still in initial phase. So what I meant by that is like something that we know that it has the potential to go up, but still it's a very early phase. And investments like this are very risky in one way, because it's very hard to come up with the perfect shares that gonna boom in next bull run or stuff like that. But what if you catch one of the shares in the early phase? The return would be like insane amount of return. So it's more of a like high risk and high reward scenario. But if you really want to grow your portfolio, you have to take some risk. That's why first we build a very strong foundation, then we invest some of our money under very good growth stocks, and now we're doing some risky investment for good return. Because if we don't take this sort of risk, it's very hard to come up with an insane level of return to make good overall return. So that would be my suggestion to you. So for that, you have to do some search and you have to come up with some of the stock that you believe in, and invest your 15%, like $150 under these stocks. So for me, I choose some IT stocks that are already in the early phase and it has the potential to go up. So you have to also do the same. So in this way, we are done with our 90% of investment. All right, so now we're left with 10%, which is like $100. And this time we have to take a little bit way more risk than previous strategy. So now for that, here comes the next thing, that is the crypto market. Imagine you purchased some Bitcoin in 2013 or 2014. A Bitcoin price was less than $1 in few cents, and now if we want to check the Bitcoin price here, where is the Bitcoin BTC here? Right now, at this moment, one Bitcoin is trading at the value of $144,958. I bought some Bitcoin a fraction because I was doing this sort of strategy, like doing the diversification. That's why I didn't put a lot of money under crypto. So, still, I purchased some shares of some fractional percentage of Bitcoin, and it has generated like 250% my initial investment return of my initial investment, which is like $12,000, which is crazy amount of money. So here, the concept is like to catch the trend, to invest under the sector, under this crypto sector, because the way crypto market is evolving in near future, maybe we will all use this digital asset in our banking system too, for transaction and everything. So we don't want to feel like we are left behind. So that's why we have to take some risk, and if it works out in our favor, then there's room, very good room to grow your money, and the returns would be like insane amount of money. For that reason, I also want to show you one of my strategies. Like here you can see under my activities, here in April you can see I bought a lot of cryptocurrencies, like this sort of cryptocurrencies, like few dollars here and there, because I just want to cover all the cryptocurrencies like that are currently available under my Wealthable account, so that if something goes wrong or something goes right, for instance, like if some of the crypto has a massive return like Bitcoin, then I can have at least one or two bitcoins kind of like cryptocurrencies under my portfolio, and I can also enjoy the returns. So this is one of my strategy. So if we follow this strategy and diversify portfolio, invest our first $1,000 in this manner, I believe in the next few years we'll get a very good return. And once we have a strong blueprint like this, then we can always add some more money. We'll have some extra cash to invest, and in this way our portfolio can grow way faster. That's how I did it. And now after 3 years, I am sitting on like $171,500 of stock portfolio. Honestly, I couldn't imagine 3 years ago that I would build this sort of a portfolio and it would do this good without any previous knowledge or investment idea, because I am from tech background. I'm not from economic background. I learned everything from my own, but I just kept going and follow my strategy, my diversified portfolio strategy, and it worked well. And I am pretty happy that I started investing 3 years ago. Congratulations guys for reaching this far of today's video. Today I have discussed about like how I would invest my first $1,000 with all the knowledge I have gathered throughout my 3 years of investment journey. So I have talked about like how I'd choose my account, how would I diversify my portfolio, and one thing I want to talk about is like it's never too late. If you start investing today, in few years your future self gonna thank you for start investing. So please do that. And if you guys have any question or doubt with your first initial investment, let me know in this comment section and I'll reply in a very short period of time. Thank you so much guys for watching my videos. It means a lot to me. If you found this video helpful, please like and subscribe to my channel so that you can see my upcoming videos. Well, that's all for today. Have a great and wonderful day.